Good morning. Right, that was a very interesting panel. Now, so we get to the second panel, but before that, I just want to tell Ram and Ashish was saying that I was a banker who actually became a technologist before I moved into consulting. So that's one thing. So with that, let me start the second panel where we are going to talk about all about corporate banking and transaction banking and payments to see how there's a digitization in this whole space because people always used to say that retail banking has transformed itself, but corporate banking is not far behind. So let's look at what has happened in that, and especially in an Oman context. So with that, let me introduce my fellow panelists. I would like to first invite Manish Dhameja from Sohar. Manish Dhameja is the Chief Wholesale Banking Officer. Yousra from BankDhofar. Right. We have wholesale banking, so we need to have large corporates as well. So Maryam Yusuf Al-Balushi from BankDhofar, who heads large corporates and special assets. We talk about digitization. Should IT be left behind? So, Ahmed A from Oman Housing Bank. And we talk about transaction banking and payments. Can we leave SWIFT behind? Yousra from SWIFT. Manish, I would like you to set the ball rolling. So, people said that retail banking is transformed and retail banking has transformed fast, but corporate banking is not far behind. A lot of talks about corporate digitization and transaction banking is all about that. So, what innovations do you foresee in the transaction banking space? How has that evolved and in specific to the Oman context?
Good morning, everyone. Thanks to Cedar for invitation, and Ram, thank you. Yes, people talk about generally retail banking because you see masses, but actually volumes are driven in the corporate banking side. And now, if I look at from an Oman or other markets perspective, we have actually seen banks adopting digital technology in a big way, such a way that the transaction banking activities have stepped up significantly. So we are talking about banks having actually a full-fledged corporate banking login, where you can actually view all transactions, make all transactions. Now, if I talk about, say, Sohar International, we believe that digitization will be the key strategy driving forward. And going back to the Chetan's point on business models on digital bank versus mix of the banks, we are actually focused a lot on that. So if I give an example from a retail side for time being, we have actually put retail app as a super app where you can book actually cars, we can actually book hotels, we can book air tickets. Same way if I extend it to actually the corporate side, today we have given a one single login window available to our corporate clients where you can actually do a simple salary transfer to bulk payment transfer to supply chain programs available. We believe that the geographies will not be a barrier for transacting with us, and hence actually you can do an online submission of LC or a guarantee or a LTI discounting, bill discounting by using the platforms available. You can manage your corporate cards and payments actually from security, passwords, limit setting online available. So where we are saying is how do we give convenience in the power of corporate clients. Now, extending the same thing, we strongly believe in how we can actually empower our clients. So in retail, you have seen everybody holding a mobile phone to do a transaction. We also actually launched a corporate mobile app, which basically means that we know the C-level approvers who are actually traveling out or on the move. So generally, they can actually see, view, and approve the transactions on the mobile app. So where I see actually is, while retail banking actually is moving towards the platform on a handset, you may not see that on an initiation or a checking basis on handset because of the mass volume of data and the invoice uploading happening. But I actually see is this will be very easy for C-suites to review. Also, the corporate banking is not only about easiness of transactions. It is actually, I believe, helps two purposes. One is on how you increase efficiency by making the transactions easy. Number two, which is more critical, it actually adds transparency to your transactions, which helps you strengthen your governance framework. So if I actually see multiple transactions happening through a simple ecosystem across a group company with a one single sign-in available, as a group CFO handling 10 companies, I can able easily to manage my liquidity positions and the balance sheets very effectively. So to just sum it up, it's about simplification, it's about transparency, which actually goes in strengthening the governance, and that's the ethos which will go towards making the corporate successful.
That's a very interesting point. So taking that forward with Maryam, large corporates. Now, there's always a belief that while technology plays a major role, large corporates shifts with RMs. Now, you have been working with large corporates, providing them with financing. So in your view, how much the stickiness of large corporates is linked to the RMs, and how much these digitization have really helped in enhancing customer engagement?
First of all, thank you very much for inviting me to be part of the panel. It's a pleasure to be here, and it's good to see most of the bankers here that I know. First of all, when we talk about corporate banking and relationship manager, most of the corporate bankers, if we talk about the current scenario, they prefer to interact with someone, to talk to someone like the relationship manager to resolve their issues in the bank, to find solutions. This needs to be changed slightly. We need to move the customer toward using the digital channel the way we do it with retail banking. So this trend needs to be changed. It is changing, I would say. It's taking time. It's not as fast as we want it to be. I think corporate banking moving toward digitalization, not as fast as retail, I would say. There are so many solutions that are available online or through digital channels and the banks overall in Oman and globally. So I think it will take time. What was your
how digitization can actually help improve customer engagement?
Yeah, we need to leverage more on the available technologies. Like we can use the AI. We can use the chat services available online. For example, to have a live chat with the corporate clients and retail clients to resolve their issues. If you see, most of the customers complain about call center, for example, why we have to wait for a long hour to get somebody picks the call. So this could be resolved by, I think, integrating with these chat-related application available and provide live chat or solution to the customer. So we don't have to go through the call center and all these traditional channels. Another way is using social media to educate our clients. I remember Barak spoke about enhancing services to SMEs. We can provide financial education to the SMEs using the social media, for example. Educating the clients, retail or corporate, by using social media, making funny videos. Banking should not be boring. It should not be perceived as a boring thing that we need to do every day and channels that we have to use. So we have to make it more appealing to the new generation. Yeah. So this is, that will help us to leverage the relationship with our clients.
So there was one point in Chetan's presentation about, Lulu can also become a bank, and you said bank should not be boring. So in that context, let me bring Ahmed into the picture. Ahmed, you've not been a banker before, but you're now, and you're running in a bank and part of IT. So when you're not on the other side, you would have seen a lot of expectations that the large corporates or SMEs or any of the corporates had from banks. So now coming on this side, how do you think that you are able to visualize the problem upfront and be able to proactively come up with solutions that will help to address the needs of these corporates?
So I would speak mainly and focus more from a customer perspective. I'll talk about myself as a customer. What is it that I need from a bank, really? Apart from the standard products that I'm getting, user onboarding and then transactions and payments and credit and debit, certain things that I would like to see, I would love to see is transactions enrichments, for example. Geotagging of my transactions, where did I spend my money? What did I spend it on? And if you couple that with PFM, which gives me not just, you've spent X amount on grocery, but it actually starts giving me solutions to my problems, Like, if I'm able to tell the app that every August I have to renew my car insurance, for example, and automatically, from learning my spend behavior, it starts allocating from monthly basis 10 riyals, 20 riyals in a bucket, which I cannot touch as a customer, towards my insurance renewal. And then if you want to go even a bit further from that, from a corporate perspective, I know this is a bit unique. Buy now, so we always talk about buy now, pay later, right? Pay now, buy later. So you take the 10 riyals out of my account, send it to the insurance company on a monthly basis so that by the time when I need to renew my insurance, the insurance company already has the money. All they have to do is just release the new policy. If you want to take it a step further, even connect to ROP, send an API, renew my registration, take the money out of my account. So I think this is the trend that now we need to start moving towards. We have now the tokenization, Apple Pay and Samsung Pay, but we really need to innovate on how to build those ecosystems and relationships using super apps in order to create a seamless, effortless experience for our customers. Another use case as well, and take this one for free, is, all of us, we go stop at a fuel station, right? And we have NFC, and we have, those RFID tags. If I'm able to put an RFID tag in my car and then register with my preferred oil or fuel station, and every time I go in there, a camera reads my license plate, identifies me, I stop by the pump, I use my self-service, I go pump my car, and then as soon as I'm done, it's a seamless payment. I fill this amount, debit my account, barrier opens up, and I drive out. And you can measure on this experience or this journey, what else can you create as a seamless experience? And it's not only benefiting the customer, but even corporations, because then you start reducing on your overhead of how many people you need to service by creating those seamless digital experiences.
Right. Now, Yousra, you do a lot of work in the Oman market, a lot of e-wallet related implementations. So what is your experience, and what kind of challenges you have faced, and how effective it has been in the market?
First of all, thank you very much for having me here in this panel. Assalamu alaikum to all the audience. I'm very happy to be here. To answer your question, I believe, and this is not specific to the Oman market, talking from our region perspective, we can all agree that digital wallets are rising, and on a global scale, and in development markets as well, because it fosters and contributes to the financial inclusion But in fact, there is a search by CBS Insights that predicts that the trend for digital wallets and super apps will see the market increase in value from conservative $1 trillion USD to $7 trillion USD in 2027. So however, from our experience, implementing such initiatives in our region in general or in Oman in particular face several challenges. First of all, the readiness of the existing technological infrastructure. So if we want to talk about our region, we can see that to some extent the infrastructure is not that ready. So we need to work with that with central operators, especially in rural areas where the network is not reaching, etc. Second of all, we need an ecosystem. We need banks and financial institutions that are willing to implement, that are willing to work with that, which we find a resistance from some merchants. Due to lack of resources in order to implement. And more importantly, we need to raise awareness. In our societies where cash-based transactions are mainly dominant, we need to gain the trust of the consumers in digital transactions, in e-wallets, etc., in order to increase the adoptions of e-wallets in the market. Because we see that the behavior of the consumers in our region or the Omani market might be skeptical when it comes to the reliability and the security of the e-wallets. At SWIFT, sorry, you had a question?
No, go ahead.
Okay, so at SWIFT, we are monitoring and seeing the rising interest and adoption of the e-wallets. Hence why we have done a partnership with two important wallets, leveraging the SWIFT network that reaches more than 11,500 institutions spread across 200 countries, and also the innovative application of the said wallets in order to ensure a seamless experience for cross-border payments.
Right. So Manish, coming back to you, when it comes to corporate and digital, one of the key things is the change management, right? Because a lot of things are being done manually and people are being more comfortable doing it manually. So there's an education change in the mindset, not only at the bank's end, but also at the corporate end as well. So how banks can play a role, not only, banks find changing the mindset and culture internally, but also working collectively with the customer to ensure that it's a collective success?
That's a very, very important question. And I think we, as an institution, started doing this. And I will put this into three separate buckets, and which is where we started approaching it. When I look at education, education is, first of all, also internal. Because when you launch something and what product can deliver off, unless the team is confident, aware of what to do, you will not be able to articulate it. I think that's number one. Education, same part, is actually how do we actually update the client. So there are various ways, there is no right way, it's up to be, but you have to be very consistent around it. One is about articulating the benefits of the digital products, what you're offering, which can be in terms of efficiency and risk management as I articulated. The second part can be you give them very customized pitches with respect to the sectoral landscape, because every client wants to win. If they understand there are actually a similar landscape transformations being done in a space, you generally see them more responsive and more assertive in actually asking for it. And a third thing with that is general webinars and FAQs coming in. So what we have done is, on our portal itself, we have actually put, for most of the steps to do, we have actually put up FAQs as well as the videos on that. So that a customer, when they do this tech up, they can actually do a self-help sessions available to do that. The second bucket of this is handholding. So one, actually the customer is educated and want to do it. You want to ensure the experience is right. And that actually comes in, is what I said, either you have a self-help sessions available, or you put a dedicated team actually which helps them onboarding them and helps them actually do 1 or 2 transactions for the first week. So when you get the benefit, your first experience is right, my experience is generally you hold on. And the third part comes in is you actually keep on updating them on the customer journey wins overall. because everybody wants to succeed. And if they know this is a model which has succeeded or this transformation has succeeded, I have typically seen the professionals are much more adaptive and working towards it. So I would say the three parts of education, how do you handhold them, and you actually take them through the customer journey. Last but not the least, incentives also play a role. Okay, so for a time coming in, you may like to maybe look at the overall profitability and want to incentivize by dropping your tariffs, by incentivizing them to move forward, because let's face it, you drop the entry barriers, things move many times. So these are the four buckets I would say it actually helps to move on.
So on that front, I'm just changing the order of asking the question, and then I come back to you, Yousra. So today, when we talk SWIFT, about SWIFT, or I'm not talking about the organization SWIFT, but SWIFT in general, first thing that comes into mind is ISO 20022. And many banks are still, some banks are ready, some banks are in the process of being compliant, and some banks are looking at ISO 20022 transformation much beyond just compliance. So from SWIFT perspective, right, so what is your view in terms of this whole transformation? Plus, there are a lot of things that you're bringing in because from GPI perspective and other things which align with open banking and competing with other fintechs, other payment rails and so on and so forth. So from that perspective, how as SWIFT, you're working with banks and you're working with fintechs to actually get this whole corporate banking space, completely digitized?
So it's not news that ISO 20022 is coming next year. The end of our coexistence period will reach its end in November 2025. And as you mentioned, some banks are ready, some banks are getting ready. I hope that everyone here is ready. And so when it comes to ISO 20022 or whatever SWIFT is doing in the landscape of frictionless payments, etc., beyond compliance, ISO 20022 is going to give rich data and structured data that will allow the payments to go as frictionless as possible. And this is the core of the SWIFT strategy for the last few years, going in adequate with the G20 goals of ensuring seamless payments. When it comes to the initiatives that we are doing in that regards, as you have mentioned, we have launched in 2017 SWIFT GPI, an innovation when it comes to the cross-border payments landscape, focusing on four aspects: the speed with an SLA of 24 hours, the transparency, so full visibility on fees deducted by each and every agent in the correspondent chain. We also focus on the traceability, so you can trace the payment in real time at any time, so you can see where the payment is sitting. And also the remittance information stays intact. Building on the rails of SWIFT GPI, we have as you mentioned, the rise in fintechs, etc., making it very competitive market for the banks to compete in the low-value payments landscape. So what we have launched was SWIFT Go for low-value payments, capped at 10,000 euros, dollars, and JPP, with full transparency, upfront transparency on the fees, and with the full principal amount being respected. In the context also of reducing fractions from payments, we have launched pre-validation a few years back as well, which allows the confirmation of payee or the confirmation of the end beneficiary information before the payment is sent on the SWIFT network, which allows to reduce the processing time due to errors or the delays due to errors and fraudulent tentatives, etc. So one last point. We also have the case management for the investigations and inquiries management in a standardized way in order to also reduce frictions from the payment transaction.
Right.
Yeah.
Just to take that forward with you, Maryam, just see when you're talking about the entire digitization and when you're talking about corporates, there's always a convergence of cash management and trade, and people say we need to bundle and look at more relationship-based rather than, I think we had the discussion of silos in the past as well. Now the question is, when you look at large corporates, right, they're multi-banked. So what are the key attributes that you feel that will make them stick with you other than, bundling of products and looking at a more dynamic, effective pricing strategy?
So other than relationship.
Other than relationship, for sure, yes.
Okay. So if we look at other than relationship ways to improve the relationship is, I would say, offer, first of all, understand the need of the customers and provide the proper solutions, one of which could be providing the advanced biometrics authentication. So the customer can avoid using the cash by just using their fingerprint. I'm not talking only about retail, corporate as well, using fingerprint, voice recognition system. That should be introduced to the corporate world, I believe. Also, we have to do the contactless payments, just like Apple Pay. That will help also to improve the service overall that banks provide to corporate clients. Payment platform is very important. We need to do the transfer in a faster manner. Of course, SWIFT will help. As she said, real transfer, why the customer goes to the exchange and get it transferred quicker than banks. We should be more advanced in terms of providing such services to our clients. Also, Manish also mentioned that, which is enhancing the mobile services that we provide to our corporate clients. It should include all the needs that the corporate requires in terms of trade. If I want to open a letter of credit, I should be able to do it through my mobile application, not only internet banking. All the channels should be providing the same type of services to our corporate clients. Yeah, that's it from my side.
Right. So, Ahmed, you heard all the bankers talk, or all the business people talk now from an IT perspective. There are a lot of regulations that are coming in. So there's the compliance part of it. Then there is the whole cybersecurity part of it that needs to be taken care of. Then there are a lot of initiatives coming from the central bank, like your open banking framework. They are also looking at cloud adoption and so on and so forth. So from technology standpoint, as a bank, from an IT in a bank, so how do you think that you can chart the path? So let's take the question for the chart the path for transaction banking, basically for corporates. And how do you think that there is still room left in a market like Oman to really make a difference?
So people who know me knows that I'm a little bit radical with my approach. So we always talk about finding a solution or solving a problem, but that is usually a reactive approach. And what we need to start practicing is becoming more proactive. And with Gen AI, there's a lot of predictive analysis that we can do. We can predict fraud before it even happens. So with these tools and with these capabilities that are available out there, and conducting all these predictive analysis and understanding the trends of transactions, of payments, of even credit, not just debit, for anti-money laundering, for example, we can start putting controls in place that stops the issues from happening before they actually happen. So when you look at fraud detection using AI, AI can actually predict the fraud before it happens, and also while it's happening, and then gives your fraud detection team notice that there's a fraud that's happening right now. So investing in AI, investing in the capabilities of predictive analysis, that is the way forward. And with how things are moving right now and how technology is advancing, specifically as many AI solutions or digital solutions out there, that means there's a lot more for people to exploit in order to, find vulnerabilities and exploit these vulnerabilities. And we need to be as quick, if not even quicker, than those entities in addressing those vulnerabilities and those issues. So I think that's the main message here that I wanted to send.
Right. So now, I would like to just put one question to all of you, but then I want to talk about some trends, but I heard in the last panel, Sarah saying it's very difficult to predict the trends, so I would not want to get into that, or I won't put you into that. But there are a lot of talks about, like you talked about AI, there's talked about API monetization, there's talk about data monetization, they talk about collaborating with corporates to offer banking as a service, not only telcos kind of thing, which typically happens, but in general, providing banking as a service, providing everything as a service, as they call it today. So in that context, I would like to also ask each one of you, maybe we'll start from Ahmed, you, in terms of what do you think is going to happen in the future with respect to the banks and corporates as corporates bank with banks and bank wants to engage with corporates? And also, if you have X amount of reals with you to engage or to start any initiative, what would it be aligned to how you see this forthcoming?
It's when you mix corporates and retail, it gets confusing for me a little bit because I don't understand corporate transactions per se. But again, corporations rely on retail. So corporations rely on people like me to transact and to buy and sell and all of that. So I think the one game changer that would be is we need to stop thinking as bankers, facilitators. We facilitate payments as bankers, but we need to find what are the opportunities that are out there that we can capture and turn it into a solution. It was mentioned earlier about Gen Z and millennials and all of that. My kids, for example, they don't understand banking, but they know how to go on digital platforms. They know how to use the credit card and subscribe, and then I get a message like, what's going on? You know what I mean? They don't really understand that when they put my credit card on something, that means it's going to transact or take an authentication or verification amount. So reaching out to those generations, to those individuals, young people, and educating them, that starts creating a sense of loyalty between that generation and the financial institution. And as they grow in age, and you customize personas for their age groups as they grow, and whenever they hit a specific milestone, you open a new module for them or you open a new journey for them. So you help them grow and learn and mature financially as they grow in age. And that's how you capture them. Because it was rightly said that loyalty with these generations is very minute, it's very, very small. But if you capture them from a young age and you help them grow, that's how you get their trust, you get their loyalty, and in many cases, if not 99%, they won't leave because you help them grow and understand how to manage their finances. The other thing that I also find that could be very interesting in terms of journeys that will benefit both corporations and retails is gamification in our journeys. If I'm able to create a reward schema in my mobile bank and transition that to my children, if you do these chores, you get these amount of rewards, and I have control on how much money I can allocate to 100 points, for example. And that, not only it teaches children and helps parents, but also when they use these points to go to a marketplace, for example, and again, going back to a super app and ecosystem, they go to a marketplace and they start buying, I want to buy this console, or I want to buy these credits, or I want to buy that. It becomes a full ecosystem that benefits everybody in the community, banks, corporations, individuals, and even children.
Maryam, over to you.
It depends how much are you going to give me, first of all.
You can receive any amount.
Okay, so I want to take corporate service to another level. So I want to create a system or technology that will generate credit proposal in no time. So it will automate the proposal. Now it takes sometimes weeks. I'm sure the corporate banker will be familiar with that. So sometimes it takes weeks to get approval internally. So my aim is to generate a proposal from A to Z in 5-10 minutes. That will include a lot of AI involvement in terms of justifying the need of the customers and providing proper financial analysis, connecting to the CBO data, Mala'a reports and all that. It should be done as effectively as possible. This is one thing that I would really invest in. Another thing could be having automated relationship manager. We can automate that service. It requires time. It requires a lot of efforts from the bank side. It could be with the collaboration with fintech, for example. That will take corporate banking to another level.
Manish, over to you, Manish.
Yeah, no, I think the question you're asking is very, very broad. Okay, let me try to attempt it in two parts. I think one is some examples, and then I'll try to answer your question on what to do when the money is available.
Right.
I think point number one, let's take an example, and we realize that as a banker, the key thrust is about client centricity and how do you create value for the client.
Right.
And you create value for the client, will create value for the franchise and the bank where you work in. So I'll give you live examples. A client is working on it. He has a ERP system, but they have a different format of XML1. One client has XML3 as a bank. Can you go and tell them that don't worry about the format you have, I will do the conversion for you and make the funds available? There is another client who is working on, these are live examples, who has maybe 50 odd group companies. They're worried about the governance, about how the procurement work. They do a tie-up with a fintech to do on a cloud to see how the central procurement work. Now, as it is a fintech available, certainly they have APIs. So what we are doing is now integrate our APIs with them, such a way we can help them actually control their overall group procurement system to provide them transparency. You integrate that with virtual accounts out there, you are able to further strengthen the governance system around it. I think that's where you can actually penetrate the client, because you are helping them step by step in their decision making. And that helps them actually get confidence to help create value for themselves. Now, the question two is how much money. See, the trends are changing. We have Gen AI today. People talked about AI earlier, now the word has become Gen AI. We have actually crypto. Crypto was very simple. Now we have blockchain. We have CBDC, which is central bank digital currency coming in. We are also talking about smart contracts of the word coming in, those we're talking about. Now, all these are actually ultimately banks will have to do with. I was actually trying to pay for my Dubai cell number, and Do app actually offers you to also pay by crypto. Okay, so banks have to prepare for the trends will evolve. How actually you cater to that? And that brings to the second point. If actually a lot of money is available, I think two things banks will do. And I think in the previous panelists mentioned very clearly, the data is not relevant unless it is integrated well. So first thing is actually to integrate all the internal systems to actually define. There is a process in the entire madness of data housing such a way you can create a science and actually stress that to create intelligence. So that will be number one step if the infinite money is available. Number two, how do you create your platform so agile? Such a way it can actually leverage with so much SaaS models as well as your fintechs available. Because I may not have the ability to do the value add available, but if I have, there are, you can today do a tie-up where you can pay as you use. Those models are available. Right. But key is your understanding and your agility, which will help you actually move forward, collaborate, and win.
And Over to you, Yousra.
I will be very brief because the colleagues have said everything. While their end customers are the consumers, our end customers are you guys. So what we will do, actually, if you ask me what would be the trends, I will just say 2 trends. Front-end enablement. We are now helping and partner with our partners, complementers, to help our end customers give the best customer experience to their end customers by leveraging the Swift services to give the best customer experience to their customers. And the second point will be the digital assets. So while the bank should be preparing and investing in technology, we also keep our vital role in ensuring interoperability between the systems and to cater and orchestrate transactions across different currencies and digital assets. Thank you.
Right. Thank you, Yousra. I didn't say trends, but people did talk about trends. So on that note, I would like to leave the questions to the audience, if any. Any questions for the panelists? Yes.
First of all, thank you for a lot of insights. My name is Pankul. I am the director at Cedar Management Consulting. My question is to Manish and Maryam on the ISO 20022. So basically, there is a journey which is going on across multiple countries around us. When it comes to Oman, I believe the journey is yet to start in terms of ISO 20022 readiness. Yeah. So my question is, how are banks preparing for this journey? Because again, it's effort-taking, lot of complexities, changes around multiple systems. So how is the banks taking this initiative, and where do we stand as of now?
Thank you. See, I'm not very specific aware of this ISO part because the tech team will be fully aware of it. But where we are actually working on, see, when we decide, and this was a question asked in the previous panel about how do you prioritize? So I think 2 very simply versus anything which is required from a regulatory perspective gets priority from an investment. And the second, actually, also, how do you use this as a revenue model to get from a client insights perspective? Where I see out there is, if you look at even from the payment perspective and all, the necessary ISO standards we have actually got in the record times. So I'm pretty confident, and most of the things I mentioned about the customization of the file formats or the amendments on the API, changing all that, I am confidently say that these are done in-house. So we have the actually know-how and the techies available, which are actually working towards creating the required codes available, and there is a part of the team which is available to actually driving the governance around it. So I'm pretty confident about, with the right focus and understanding available, it should be actually met. See, also you have to understand that, as Chetan mentioned, I think if I look at from a central bank perspective, and having seen other markets, Africa, Middle East, and India in my journey, I actually have seen that over the last 2 years, central bank actually has come back with very, very progressive regulations. The other part out there is they have actually nudged, cajoled, pushed the banks to also make it happen. Okay, now whether you talk about the sandbox of the blockchain trade which came in some time back, or you talk about the digital and the open banking license now which is coming up, I think all this is coming up and ensuring that all banks actually worked collectively and walk the talk. And underlying whichever new regulation has come in, you have actually seen that the financial sector in Oman continues to be stable and continues to be resilient. And with that perspective and the background, I personally believe that yes, this may be a journey, but I think it's pretty confident that banks should be able to move successfully forward on that.
Would you like to add anything? Any other question? Otherwise, thank you, gentlemen and ladies, for this enlightening panel. Thanks a lot again.